There are lots of reports in amongst the mining community that copper will go into deficit in the next 12 to 18 months. That is, there will be excess demand, meaning that prices will rise. One company trying to address this is Vancouver-based Taseko Mines, which is listed in Toronto, here in London, and also at the New York Stock Exchange. Chief Executive is Stuart McDonald, who joins us now on the line. Stuart, welcome, and indeed welcome to London, because I know you're passing through, pressing the flesh in amongst the community, trying to help get the word across as to what it is you're doing. Before we get into some of the detail, just broadly speaking, what is the company trying to achieve, and how what's your business model?
Yeah, we're a Canadian-based copper mine, and we're building a multi-asset copper producer here, focused in the North Americas. So we've got one cash flowing asset, our Gibraltar open pit copper mine, and we've got a great growth profile in front of us with our second mine about to go into construction next year in Florence, Arizona, actually. So we're quite excited about that.
Let's talk a little bit about the production you already bringing to the market. How is that going? What's the mine looking like? What's the mine life like? And how are you continuing to try and develop that mine?
Yeah, so our Gibraltar copper mine, it's located in central BC. It's one of the largest open pit copper mines in North America. It's an operation with a long history and a long future as well. We've got 23 years of reserves left. It's a large scale operation. We put through our mill about 85,000 tons a day of ore. And with that production base, we produce about 120 to 130 million pounds of copper a year. We operate in the range in the current environment of probably 220, 230 a pound operating costs. So gives us a great operating margin, a great source of cash flow to build our project pipeline from.
I was going to ask what that profit's used for, because clearly it is something where you want to invest back into the business. Is all that money going back, or how do you reward shareholders?
Yeah, we're reinvesting in the business. We really believe in the value of building a multi-asset operation and having diversified cash flows from more than one mine. So we've been focused now for the last 8 years on developing, de-risking, permitting, and bringing into production our Florence copper project in Arizona. This is quite a unique asset. It's a low-cost operation, low capital cost, low environmental impact as well. And so we're quite excited to finally be bringing this mine online in the next couple of years. So we've got one final permit outstanding that we're just waiting for now from the EPA. And we're expecting that, possibly in the first half next year, in the middle of next year. And that's the last piece that we need. We then will move into an 18-month construction period and start production hopefully at late 2024. So that operation brings us I was
going to say, which of course is where all the cost comes. Building a mine is very expensive. How do you go about this?
Yeah.
Are you going to replicate what you've done in the mine you already got up and running? You're going to bring on a partner? You're going to raise the money in the market? How are you going to fund all this?
Yeah, we've got $100 million, roughly $100 million US of cash on our balance sheet right now. We've got an undrawn credit line of $50 million. We're actively engaged with royalty companies that are interested in funding our Florence project as well, offtake financing, equipment lease. We've got a number of different options. This is for a copper mine, a relatively low capital cost at $230 million US. So it's well within our means to finance without doing a significant equity raise or without diluting existing shareholders. So there's really a great opportunity here for our shareholders to participate in our growth.
One of the big things, of course, for any corporate, especially in the mining sector, which is very high profile in this area, is the fact we've got an increase in the responsibilities around ESG. And I know that the existing mines, a lot of mining companies have had to put a lot of money into to bring them up to what is considered to be current spec. When building a new mine, of course, you can incorporate all that into the mine plan. What ESG responsibilities are you taking on? I mean, you're in a very good and easy environment in which to work politically. Of course, North America is a very good mining jurisdiction. But you do, as I say, have responsibilities. How are you engaging with this on this mine construction, or the Florence mine, especially where you're trying to build this project?
Yeah, no, we're very fortunate at Florence. We've got a very unique situation here where we can build what we call an in situ copper recovery process. It's a very innovative, very low cost, and very low impact way of mining. And what we're actually doing, and we're not digging a large open pit, we're not tunneling underground, we're actually drilling a well field into the ore body and recovering copper in solution. So it's solution mining. We then process that copper bearing solution on surface through a conventional SX-EW plant, and we produce refined copper right on the mine site. So, you know, from an ESG perspective, we can operate this mine with a incredibly low carbon footprint, very low energy use, and very low water consumption in the range of, on all those metrics, you know, 80 to 90% more efficient than a conventional copper mine. So we're bringing a really green product to the market in the U.S. and getting a lot of attention from the customers of the copper, but also from the investors in our shareholder in our company that appreciate that environmental profile.
Yeah, let's bring up a share price chart. As I said, you're listed in 3 major jurisdictions, all very mining friendly, and you're here in London at the moment. This is the London listed stock of Taseko Mines. The current share price, I think, represents a market cap of about 520 million Canadian dollars. I think that's the way that it's measured. Although, as I said, this is the London listed stock with the share price currently around about 116. What do you say to people who are looking at an investment in the copper space? Bearing in mind, we've seen this really big drawback in terms of the actual share price, down from the highs you saw back in April this year at 180 pence.
Yeah.
Here we are now, as I say, sub 120. What's the appetite for mining opportunities, investment opportunities at the moment?
Yeah, there's good interest. You know, a lot of focus on copper as the metal, and you can see on our stock price there. You know, we do definitely ride the ups and downs of the copper price. You know, the drop in copper price that we saw in the late spring, May, June, July period there had a big impact on our stock price too. But you know, in the longer term, we're very bullish on the metal, and we think that, you know, as copper prices continue to recover in the coming years, that our shareholders are going to participate in that. So what we do as a management team, in addition to just copper price exposure, is grow our production profile and de-risk our projects. And the developments of Florence are a big part of that investment thesis for the next couple of years. We've got, you know, lots of appetite for copper here in London. We've been in investor meetings the last 2 or 3 days. Lots of interest, lots of appreciation now. I think there's a broad understanding that copper is a key ingredient for the energy transition that's underway. You know, as we transition away from fossil fuels to renewable energies, electric vehicles, all of these things require copper. You know, and we're a major producer, and we have a lot of leverage in our share price, as you could see on that chart. As the copper price dropped in May, June, July, our share price dropped. In the longer term, as copper prices recover, we're going to see a strong recovery in our share price. On top of that, we provide growth, you know, through our production profile and through bringing on the second mine and de-risking our projects. But no, it's a great environment right now for copper companies and for critical minerals generally, producers of critical minerals generally. You know, there's a lot of appetite.
Okay, Stuart, look, we'll have to leave it there, but thanks indeed for joining us. Hoping next time better join us in the studio, we can get together and talk about this face to face. But in the meantime, thanks indeed for your time. It's been a pleasure to catch up with you. That's Stuart McDonald. He's the Chief Executive of Taseko Mines. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.